Hi everyone, my name is Anne-Marie Band, and after the long US holiday, today is Tuesday, May the 27th, and this is the Moneyball Morning Report for the Benzinga Pro platform. So, what do we have looking at? We have wider expanded volatility. They expect quite a bit of movement this week. The edges are a little bit wider out, and so far we have a break below the opening hour and a break above the opening hour. This gives us a bit of a sideways range and a potential megaphone pattern in the structure for today. So what might we look for if this megaphone pattern is going to exist? First of all, the high of the opening candlestick formation of the Globex is 5,891. That would be the first buy zone of an old resistance, new support, while momentum is up and trend, we can see our trend indicator here is also up. If it loses 58.91, the middle of the opening range at 58.84 to the bottom, pardon me, to the bottom of the opening range near 58.76 becomes the target. So I would wait for it to confirm its direction at 58.91 for the long. If the long holds right here, and you know to wait for a confirmation, you go to smaller time frames and you wait for it to stop heading lower, take support, old support out, that would be new resistance, and it pulls back and makes a higher low. So the next candlestick in rotation would be the upside formation you would be looking for. Else, a short would open up. All right, long targets, upper edges, 5,927 to the low of the opening range of 59.36. That's above us. For below us, we have again that 58.79, 58.78. The test of old resistance that was support, that's down there at 58.65, and then the low implied vol on the day is 58.51. But we could move outside that into the heavy congestion zone, and I should move that up into 58.39. We have quite a bit on the docket this week, and this is probably why our formations are so expanded, but we shall see. Here we are with the NQ, the E-mini NAS, and the opening range is about 70 points wide, so it's a little bit tight relative to the Qs. Notice what Monday's formation was. This is Sunday night, so it could retrace this entire event, or it could hold the base, and that's where the low implied volatility event on the day is sitting. So what did we do? We broke below the opening range and above. We have trend up. We're sitting above the moving average, just like the NQ, just like the ES. And so this could be a megaphone pattern sitting right here. So what is the trade? If we hold 21,290, that's going to give us long action back into 21,337, then 21,375. The implied move is all the way up here at 21,446 for the high end of the long targets. The short target will do the same thing here. If we lose 21,290 and we cannot bounce back above 21,330, we've got ourselves a short that opens to the bottom of 21,224. 21,169 becomes that next target, and then 21,116 roundabout where the base might be. If this turns into a really solid megaphone pattern, we could have a lower test of 21,043. So what are we staring down? We're staring down a potential inverted head and shoulders pattern. You know, I hate measuring with those things, but the weekly implied volatility, look at how wide it is. The low edge, 20,835, the high edge, 21,783. That's pretty wide. So it's going to be an interesting day. lot of choppiness. The edges are going to give us our best chances of low risk, good reward trades, right? And so you want to look at these targets that I've got sectioned out here in terms of watching price action behave on those edges. EU just signed a big bill to shore up their arms. Not sure how they're going to pay for that, but we should see liquidity enter the market, and that liquidity event should push the markets a little bit higher, but the bonds are going to be the things to watch today, and so we'll be talking about that live on Top Step TV just a little bit this morning. All right, taking a look at the YM, same sort of formation. We are above the 63 moving average. We are in positive trend, which means our dips should be buys. We've done the same thing in all of the indices this morning. We have broken below the opening range as well as above the opening range. That leaves 42,138 as a potential buy zone. If it can't hold that area, we should retrace the opening range and head to the base of that range with the low edge test on a short of 42,000 and then lower targets into the opening range of 2 days ago. My suspicion is that this one might be a little sideways. Hard to say. Really, really hard to say. Moves, I've estimated from 42,386 as the top of a long formation that breaks out at the hold of 42,150. That would be the buy zone. Target area 42,350. On the low end, it loses that 42,150 and can't recover. That will open up the short formation and pull us into the lower edges near 41,900 and then 41,792. Expected moves are still very wide for this chart, right? Look at how wide the range is. Of course, these are quarterlies, but this is a 30-day marker so far. Pretty wide. So that means volatility continues to increase. All right, so what are we staring down now? In micro Bitcoin, pretty big range. Let's take a look at this, right? We had a range breakout around 107,000. We dipped into 106,000 and some change. That is the low of the opening the opening hour on May the 20th. And now we are back in this very sideways pocket. We've got a range of about, what is that? 1,700 ticks. And we are at the top of the opening range after breaking the bottom. Now here's the difference between this one. The trend is down. The super trend line is above price, so that means it's downward pressure. We've got a downward 63 moving average, but we've got upward momentum. Volume has been very thin, so it's ranging. What's a fair test? This is, we might call this a cheap short because failing to breach 110,000 opened up the short here. This would actually be the candlestick that we would be going short in at this time, and that would bring us down into the bottom of the opening range at 109,000, and then a further test into 108,350, and then 107,800. That's what we're staring down. On the upside, we would break over 110,000 and then move up to 110,600 and then 111,350, thereabouts. You can see the very sticky range here. This is a box of very heavy contention. Look, inventory accumulation and distribution at a discount, right? And so now we are in an accumulation space again, and that's a pretty big range, but it does show downside pressure events as what is most likely. All right, let's take a look at oil. Oil in a very sideways pocket here. whoops, let me close this one off. Let's see what fib we might put here. Let's add swing high, right? This defines our market structure. Swing high to swing low, 50% range. It tested it during yesterday's cycle. We've got a very tight opening range below the opening range low and then above the opening range high. That gives us another chance at a potential megaphone. This is very sideways. The edges are going to give us our best bet. So my suspicion would be to look for a short at $62.35 once it rejects, or a long somewhere around $60.50. That is my thought. If it sits in this range here between $61.14 and $61.90, it's going to be a coin toss for the direction that you want to choose. Does it have the moving average supporting it? Yes, but it's also swinging away from that average and then pulling back. And so there is a very tight structure here, and that tells me wait for the edges. Oil looks very, very messy, and indeed, with this week ahead, we're going to have a lot of messy charts. Gold is going to be in rollover, and it is now at the bottom of the range that it created on the breakout of May 20th and retesting on the 22nd. This area has been a buy zone, but I'm not sure that this is a good buy here. Now, here's the thing. If it's the bottom of the range, so there is a potential for a buying event here, you just want to really watch your risk. And, of course, what do you want to do? First, it's got to stop heading lower. Let's do the last one to see how it fails. First, got to stop heading lower. There we go. Second, got to break resistance. It did test resistance. Third, it's got to pull back and hold the low. Guess what? It did not. So this is still in a downward trending formation, potential test at around 3,280, and that is another region that price action might hold. This is the weekly implied move. It's already broken through its daily implied moves, right? So we are moving well outside of that range. If this catches hold, the next line in the sand below is 3,248. If the price action recovers here and we're able to take a trade at around 3,296, the first target will be 3,308 and then 3,322. That's a very familiar number. We are in a downward trend and under the 50. And when I say downward trend, I mean the super trend is pointing us downward. The moving average is still up to flat, telling us that dips are buy zones, but only into resistance at this juncture. Let's take a look at SPY. SPY had a pretty interesting gap up, so my suspicion is that a gap fill will be very likely. What are we doing? We broke for a second above the opening range, but could not close a candle above there. Now, we are beneath the opening range. That has triggered a short. This would be the short action event here with the stop at the high of the opening candlestick with just a couple of ticks above it to be safe. This is certainly downward trending into the lower edge of the implied vol move, and that's $583.30. Notice how messy it is. So it could break below and then recover, right? If you're taking the short, you want to take part of the position off here, not a place to go long until structure tells you that you're able to go long. Weekly implied volatility moves down at the prior trading day's low near 575. That's for the week. But the opening range today shows the high target, if you were deciding to go long, above that opening range at 588. 593 is what they're anticipating. 583 is what they're anticipating below. So we've got a lot of sideways motion. Trend down, and the super trend also trending down, but it's got an upward draft. So that's a very messy patch here. Momentum is still up. So dips are going to be buy zones. So in order to take the short, you want to make sure that it's a failed retest. You could take it here and take the entire risk of the opening range as the trade, but it might be worthwhile to give up a couple of ticks or a few ticks to have it confirm that it's got downside potential. It is messy because the trend is down, but we are sitting above the moving average, and so that could be some kind of reversal. Lastly, let's take a look at the Qs. The Qs doing the same thing. This is a breakdown. We also have NVIDIA earnings this week, I believe. I don't know if that's going to be big or not big. I have no idea. But what we can see is that the Qs were in a very big consolidation zone and then broke through it and now back inside the consolidation zone. If they lose the 50% marker, and you know what? Let's change the wave to the most recent swing high, swing low. That's how we build the market structure. The 50% range, interestingly, is right at the bottom where we've got the daily implied volatility measure. Okay, so this, to me, this is a place where you sit on your hands and you wait for some edges to confirm. There are no really pretty trade setups today in my mind. Fairly ugly, especially since volatility is so wide. So again, wait for your edges, and those edges could be the candlestick formations on the 1 hour here. What in the world? I can't get this measure right. There we go. All right. So it could be at the break of the opening range to the north. It could be at the fail of the opening range to the south. But watch your risk. It's going to be a fairly choppy day. My thought is a downward grind, but I could be wrong, right? We just have to pay attention to what's going on. Good luck trading today. I'll be on the opening bell at 8:20 a.m. Eastern Time on Top Step TV. And of course, you can join me for the Benzinga Options Show, Options Live at 11 a.m. Good luck, everyone.